gold for Gibson's paradox, silver for the military industrial complex. We can go down that road maybe when I see you in Vancouver what I mean by that. But the point of it is that whether you take the 100-year average, whether you take the breakout of the cup and handle, I think $100 is easy. But, you know, it's coming out of the ground at 7-to-1. So in terms of its geologic ratio, 44.50 divided by 7 is $635. As crazy as that sounds, I'm not saying it's going to get there, but put it in perspective when you see what Bank of America says. And they're using the gold-silver ratio as their barometer because they're saying $500 or $5,000 gold next year.
I expected gold to hit 5,000 over 10 years ago. Now, it's probably going to hit 5,000 this month, but of course, I've adjusted my target now because this problem has gone on for as long as it has, because we've kicked the can down the road for that decade. 5,000 is not my target. We're going to 10,000, we're 20,000.
Gold and silver are entering a new era of price discovery as long-term structural forces collide with monetary instability. Analysts point to Gibson's paradox as a key driver for gold, linking rising interest rates and inflation expectations to soaring gold prices. Silver, meanwhile, is increasingly tied to the military-industrial and technological complex, where supply constraints are becoming critical. $100 silver appears achievable, with extreme upside scenarios stretching far higher. With gold rapidly approaching $5,000 far sooner than expected, some forecasts now extend to $10,000 or even $20,000 as decades of monetary mismanagement unwind. Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I think $100 silver is something, you know, Keith Neumeyer made it famous years ago with his triple-digit silver shirt that he sent me for during Christmas maybe 4 or 5 years ago. And, you know, at the time people laughed about that, but he's not too far from being off. And in fact, if you could take a technical viewpoint of it and talk about a 45-year cup and handle formation that was broken. Now, a cup and handle formation in technical analysis is one of the most bullish formations you'll ever see, especially one that's 45 years long. So at the top in 1980, you had $50. At the bottom in the early 90s, you had $4. The difference from top to bottom is $46, right? So then you get back up to 2011, $50. It's rejected. That's the top of the cup. Then the handle comes down to where we were just recently when we broke through 50, and off it goes. Now, technical analysis would say you take the top, you take the bottom, which is 50 minus 4, 46, add it to the breakout, that's $96. Not too far from it. Now, at the same time, if you take right now the price of gold at 44.50 and divide by 45, well, you can see what that's going to be pretty easily. 44.50 divided by 45 is $99. 45 is pretty much the average price ratio we've seen for the last 100 years, and that's with central bank manipulation holding down the silver and gold price. Gold for Gibson's paradox, silver for the military industrial complex. We can go down that road maybe when I see you in Vancouver what I mean by that. But the point of it is that whether you take the 100-year average, whether you take the breakout of the cup and handle, I think $100 is easy. But, you know, it's coming out of the ground at 7-to-1. So in terms of its geologic ratio, 44.50 divided by 7 is $635. As crazy as that sounds, I'm not saying it's going to get there, but put it in perspective when you see what Bank of America says. And they're using the gold-silver ratio as their barometer because they're saying $500 or $5,000 gold next year. So you take 5,000 and divide it by 45 and you get $111. Take 5,000 and, you know, divide it by 35 where it got down to in 2011 and you're at 142. Look, all I'm saying is that we're still undervalued. There's still a long way to go by every metric, whether it be historical price averages in relationship to gold, geologic averages that go back 5,000 years, and really an asset that's never been allowed to find real price discovery. So yeah, I think we still have plenty of room to go. But Charlotte, I want it to be very clear, you know, you don't buy the problem people made in 2021 with silver squeeze is that they bought it for the wrong reason. And I think they became disenchanted with its performance. You don't buy silver to become wealthy. You buy it because it is wealth. For 6,000 years, if you look at gold and silver, cumulatively mentioned over 700 times in the Bible, it's been wealth through 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And history doesn't always repeat, but it sure as hell rhymes. And now you see the biggest money in the world, the most well-informed money in the world, whether it be the central banks, the commercial banks, the sovereign wealth funds, or now the institutional traders here in the United States that are showing you through delivery of both gold and silver just how important it is.
Silver is regaining attention as a long-term store of wealth rather than a short-term speculation. Market veterans point to the famous triple-digit silver thesis popularized years ago, once mocked, but now increasingly credible. A rare 45-year cup-and-handle breakout, one of the most bullish patterns in technical analysis, supports a move toward $100 silver, aligning with the 100-year gold-silver ratio average. Even conservative models suggest silver remains deeply undervalued relative to gold and its geological scarcity. More importantly, history shows silver's true role, preserving wealth through wars, inflation, and crises. As central banks and institutions accelerate physical deliveries, silver is quietly re-entering real price discovery. Let's get back to the interview.
I expected gold to hit 5,000 over 10 years ago. Now, it's probably going to hit 5,000 this month, but of course, I've adjusted my target now because this problem has gone on for as long as it has, because we've kicked the can down the road for that decade. 5,000 is not my target. We're going to 10,000, we're 20,000. We're going much higher. Had gold gone to 5,000 in 2012, 2013, had we had a dollar crisis and a sovereign debt crisis back then, maybe we could have diffused the situation, and we would have already been on the upswing a long time ago. But no, the problem got much, much worse than it was back then. And it just means gold is going to be a lot higher before this gets resolved. But what was the catalyst for this big move? Now, of course, I don't even think we needed a catalyst. Pretty much every Sunday night, like clockwork, you get a big move up in gold and silver. Now, this is one of the biggest, maybe the biggest. But that's why I'm always telling people, get your orders in. I do these, Shift Gold Friday market wraps, and I say, buy Friday night, buy Saturday morning, Saturday night, Sunday morning. We're 24/7 at Shift Gold. Don't wait till Sunday night, because that's when the Chinese wake up and they start buying gold and the price goes up. So we don't even need a catalyst. I mean, the catalysts are already, entrenched in place. So gold and silver are going to go up. But there was some things that happened over the weekend that were particularly bullish for gold. And in fact, they're probably more bullish than was reflected in the market. Certainly in the bond market, in the foreign exchange market, the dollar was down, bonds were down, and stocks were down, but they finished positive, so they shrugged it off. But gold and silver were the primary markets that reacted to the news. But maybe there'll be a delayed reaction, unless, of course, there's damage control and they walk the whole thing back, which they may do. But, the chicken is out of the bag now, or the cat's out of the bag. And so it's hard to really walk it back, even though they may try. But it's pretty much out there. I guarantee you this: whoever Trump picks to replace Powell will be way worse, right? Kudlow and Laffer and Steve Moore, they're saying, we got to get somebody good in there. We got to get rid of this horrible guy and put somebody good in there. Nobody good is even being considered for the job. We're never going to put somebody good in office. That's the last thing they want. In fact, the reason they want to get rid of Powell is because he won't play ball, because he won't cut rates enough. That's the one thing he's doing good. He actually should be hiking rates, right? So he's got that wrong. But at least he's not caving to all the pressure to cut them even more. What Kudlow and the gang want is they want somebody in there who will do exactly what Trump wants. How is that good? That's like, I want to have a chaperone at the prom who's going to bring all the liquor and make sure the punch bowl is spiked to the max, right? That maybe that's what the kids want, but not the parents. They don't want that. But they can't criticize Trump for anything. This is the kind of stuff that's going on. This is so bullish for gold and silver. Even if they walk it back, who knows? Maybe we'll get a pullback in gold and silver if they walk it back. We're not going to stop making new highs. we are completely repricing these assets for a new world where the dollar is no longer the reserve currency. Gold is going to be the reserve monetary asset, real money. The dollar's days as the reserve are numbered, and the number may not be that large. Silver, of course, is going along with gold, but silver's got a lot of other supply and demand dynamics that are extremely favorable for the price of silver.
Gold and silver are entering a historic repricing as long-term monetary problems finally surface. After expecting gold to reach 5,000 over a decade ago, analysts now believe that level is imminent, yet no longer sufficient. Years of delayed crises, rising debt, and currency debasement have pushed projections toward 10,000, 20,000, and beyond. Gold is increasingly viewed as the future global monetary reserve as confidence in the dollar erodes. Regular buying pressure from Asia, especially over weekends, continues to drive prices higher without the need for new catalysts. Silver is following gold's lead, supported by tight supply, industrial demand, and accelerating physical delivery, signaling a structural shift in global markets. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.